Good afternoon, I'm Sage reporting to you live from 𝐶𝐞 𝐂𝐲 Studios. It's lunchtime here in Sydney, and you know what that means. It's time for the Mid-Market Pulse. In this show, we'll take a look at the Australian share market's performance, stocks that topped the gainers and losers charts as well. And in the final segment, we'll focus on the stocks that grabbed the headlines today, so please stay tuned with me till the end. The Australian shares traded flat by the afternoon, erasing the opening losses, led by gains in utilities, consumer staples and the financial stocks. However, weak cues from Wall Street and continued rises in the COVID-19 cases restricted the market's gain. In the last 24 hours, New South Wales recorded 633 new local infections and 3 deaths, while Victoria reported 24 new cases. The ASX 200 was currently trading 2 points lower by lunch, extending previous session losses. The index opened lower today and declined as much as 0.5% to hit a low. The index, however, soon pared the losses and rose nearly 0.2% within the first hour of trading. Investors also reacted to the corporate earnings, with some big players such as Domino's Pizza, Woodside, Nearmap, Oz Minerals, CSL and Super Retail announcing their results this morning. And on Tuesday, 18 big companies announced their earnings, including BHP, Santos, Charter Hall and Dexus. Shares of BHP topped the losers list as investors gave thumbs down to the company's decision to sell its petroleum business to Woodside Petroleum to create a new, bigger petroleum entity. And let's move on now to the sectoral front. 8 of the 11 sectors were trading in the green, and the utilities sector was the best performer with a 2% gain, followed by telecom and consumer staples, which rose over 1% each. Among others, financials, A-REITs, industrial, information technology and consumer discretionary were all notable gainers. Bucking the trend, however, materials sector was the worst performer with 1.8% loss, led by the sell-off in the mining stocks. It was followed by the healthcare sector, which dropped 0.85%. In this segment now, we'll take a look at the biggest gainers and losers in more detail for the mid-market session. Oil producer Beach Energy topped the gainers chart by rising over 8%. The stock dropped in the last 2 sessions after it reported a fall in its revenue and profit for the financial year 2021. And some of the other notable gainers were Domino's Pizza, energy firm Origin Energy, infant formula company A2 Milk and biopharma major Clinuvel Pharmaceuticals. On the losing side, blue chip miner BHP Group declined the most, falling over 5%. And some of the other worst performers were financial firm Netwealth Group, metal recycling firm Sims, gold miner Pilbara Minerals and building products manufacturer Fletcher Building. Let's now take a look at the stocks that hogged the limelight today. And beginning with the heavyweight BHP Group, who dropped over 5% after the mining giant said it will end the dual listing of its shares on London's FTSE 100 index. The company has also announced to exit from its $13 billion petroleum business to focus on core assets. As announced yesterday, mining giant BHP is set to merge with Woodside to claim the title of Australia's largest publicly listed energy company. The $20 billion merger will push them into the top 10 energy companies in the world. And the BHP shareholders will have a 48% stake in the new entity. And meanwhile, the iron ore giant reported underlying profit of $17.08 billion for the full year ended 30th June. It has also rewarded shareholders with record total dividends of $15.2 billion for the year. Shareholders will receive $2 per share final dividend on September 21, thanks largely to record iron ore prices. And now, before we look at the shares that are in the news, it's time for a short break. Hi, I'm Sage, and get ready to take the crypto ride with me on 𝐶𝐞 𝐂𝐲 TV. Watch the crypto buzz every Tuesday and join the excitement at 𝐶𝐞 𝐂𝐲 TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching 𝐊𝐚𝐥𝐤𝐬𝐴 TV. Welcome back. Thank you for joining us, and hopefully you're enjoying your afternoon so far. I'm Sage, you're watching 𝐊𝐴𝐥𝐤𝐬𝐴 TV live from Sydney, and this is the Mid-Market Pulse show. Shares of Australia and New Zealand banking group rose 0.7% after the lender issued Pillar 3 capital updates. It reported a common equity Tier 1 ratio used to measure financial strength of the bank of 12.2%. The bank said that the recently announced $1.5 billion Australian dollar on-market share buyback is expected to further reduce the CET1 ratio by around 35 basis points. The bank also revealed that its home loan book has declined by 300 million Australian dollars down to 280.3 million Australian dollars during the June quarter, from 280.6 billion Australian dollars at the half year to March 31st. The shrink in home loans books was attributed to customers who are using low rates to pay down debt faster, citing a $16.2 billion increase in lending offsets by a $16.5 billion increase in paydowns. Oil and gas major Woodside Petroleum shares fell 2% despite increasing its interim dividend. The energy major has declared an interim dividend of 30 cents per share for the first half of the year, compared to 26 cents a year ago. The company also reported rebound in profits, rising to 317 million Australian dollars from a loss of 4.1 billion Australian dollars in the same period last year. And revenue rose by 31% to reach 2.5 billion Australian dollars, while production dropped 46.3 million barrels from 50.1 million barrels of oil equivalent. And shares of Commonwealth Bank of Australia rose over 1% after the lender launched its new Buy Now, Pay Later product, Step Pay. The bank said that its customers who pre-registered for its BNPL product will be able to load the new card into their digital wallets from Wednesday. The move is being seen as a step to stop customers fleeing to Afterpay, PayPal and Zip. And the bank will allow Step Pay to be used for purchases under 100 Australian dollars in one go, while purchases above 100 Australian dollars will be split into 4 equal instalments without any cost to the customer. Silver Lake Resources shares gained nearly 2% after the gold miner unveiled its earnings reports. The profit after tax dropped 62%, down to 98.2 million Australian dollars for the financial year ended 30th June 2021. The revenue climbed 5% to 598.3 million Australian dollars, while earnings before tax, interest, depreciation and amortisation rose 12% to 290.8 million Australian dollars. Gold production stood at 249,177 ounces gold equivalent, with gold sales of 248,781 ounces and copper sales of 1,724 tonnes. The company said it has met full-year guidance for both sales and all-in sustaining cost, despite the challenging conditions prevalent in Western Australia throughout the year. Going ahead, however, the company has set sales guidance between 235,000 and 255,000 gold ounces at an AISC of $1,550 to $1,650 Australian per ounce for financial year 2022. The share price of Deterra Royalties rose over 2.5% following earnings reports, and the resource-focused royalties business has reported a revenue of 145.2 million Australian dollars for the 2021 financial year, while net profit after tax stood at 94.3 million Australian dollars. This is the first earnings report post-demerger of the business, and the company has also declared a final fully franked dividend of 11.52 cents per share. Australian biotechnology firm CSL is next on the list, who gained over 1% after it declared record dividends. And the healthcare major announced a final dividend of $1.61 Australian per share for the financial year 2021, its biggest dividend on record. And besides, the company reported a 13% rise in revenue to $10.3 billion, while net profit also grew by 13%. Up to $2.375 billion. Going forward, the company expects a Weaker performance in the 2022 financial year due to margin easing as a result of increased plasma costs. Shares of Domino's Pizza also made the news today, jumping over 4% to hit fresh 52-week highs on robust earnings. The underlying earnings before interest and tax rose 27% to 293 million Australian dollars in the financial year 2021, with 2/3 coming from its European and Japanese operations. Food sales surged 14.6% to reach 3.74 billion Australian dollars, driven by an increase in stories that included 126 new outlets in Japan alone, which made news earlier this year. And the company has also announced a final dividend of 85.1 cents per share, 70% franked, with an ex-dividend date of August 25th. And shares of Nearmap gained 0.5% after the aerial imagery technology firm released earnings reports. The company has beat its annual contract value guidance for the 2021 financial year, driven by a record performance in North America. And the company ended the financial year with a group ACV portfolio of 133.8 million Australian dollars, exceeding guidance and representing year-on-year growth of 26%. Meanwhile, however, its revenue rose 17% to 113.4 million Australian dollars, while its loss after tax reduced to 18.8 million Australian dollars. And the company, however, did not declare a dividend for the period. And thank you for your company on that report. That's all for now. Keep watching 𝐾𝐲𝐿 TV as we'll bring you the latest news and trending market updates live from Sydney. Sage signing off.